Hello and welcome to the Stock Planner channel. Don't have a lot of time this evening. I have to get ready to go shopping with my wife tomorrow. Let's get right at it. I did a scan of companies, large cap companies, that are undervalued and are growing. Large cap, undervalued, and growing. It came up with 67 companies. Of course, Amazon's there, Facebook, and some of the big names. Then I took these 68 stocks and seen which ones perform best with my system. In other words, when the MACD is below the zero, when the stochastic RSI is below the 30 and come back around, and when the RSI is below the 30 and come around, when the stochastic RSI is below the 20, not 30. But when all the three of those things come together, like in here, you get a buy signal. So what I did was I back tested it from January 1st, 2020, and picked out the best stocks that performed well with my system, of which there was around 40 of the 68. And then I wanted to see the win rate. A lot of 8% winners. That's pretty cool. And these are the ones that are open at the moment. We're trading with $1 million, so you can't use these figures here. But we want to look at the number of trades over those 2-year, 20-month period of time, and the win rate, 73% win rate. That's pretty cool. So it's a winning system and some winning stocks, and let's see what the trades are for the day. In my system, some of the trades last a few days. Amazon is showing a buy. PDX, a buy. We've been having buys here, and I guess it's going to fill that gap. But today, I want to look at a medical system. Cardinal Health, CAH, been beaten down. They had a recall of one of their medical instruments. Didn't have instructions. It's in the box or something silly like that. But it looks like it's ready to come and want to fill that gap. It was beaten down, and so I would like to maybe go long on this one. But first I need to know a little bit more about CAH, because it's not one of the ones I regularly trade. Since I did that scan for undervalued stocks, not all the stocks that are on my regular watch list are undervalued. I got some, somebody that's on that list for 2 or 3 years. I was just interested in undervalued because I thought they perform better if we have a recession or if inflation continues. That's why I chose those 68, of which around 40 traded well with my algorithm and system. So we're going to look at CAH and just see if we can find anything more. But this looks like it's ready to go based on the MACD way below the zero. The stochastic is in its oversold position. And so is the RSI. It looks like it's all ready to come around, but I don't know it. And I usually like to place my trades about 2 months out. I use options 2 months out, and hopefully it'll come up into the 55 area, and hopefully stay won't go below 50, 55, 50. What do you think? Stay in that area for 2 months, or fill it up? If it goes higher, I'm happy with that too. But I think it'll stay in this area, almost guaranteed. By the way, that's a stock planner guaranteed. You take that as far as it'll go, which is not very far. These are snowflakes, and you want to have, if you're a long-term investor, you want to have the snowflake as green as possible, and especially the growth part of it, the future growth right in this area. And this is Cardinal, and it's not so green. The health of the company is good. It does pay a dividend, and the future looks to be growing. Not much here in the past. Let's take a quick look at this. It says Cardinal Health operates as an integrated healthcare services and products company in the United States, Canada, Europe, and Asia International. Kind of like that. And kind of like the healthcare sector. Drilling down, it says it provides healthcare solutions. Well, what I think this is it provides equipment, surgical gear, medicines, tailored to specific offices and different areas of medical expertise. It says it's trading it below its estimate of fair value at 65%. That's really terrific. Earnings are forecast to grow 10%. So it seems okay. And it just became profitable. So it's not going to have a past history of being profitable. Lots of debt. Does pay a dividend. And they're getting that money somewhere. But it's not from earnings. And these are the competitors. They're all a little orangish looking too. In fact, this looks a little more yellow than that. Turning green. According to Simply Wall Street, this is where it should be trading at 151. Wow. I'm going to let the cat out of the bag Tip ranks has this at a lot less. Tip ranks has this at a lot less. So you have to believe who you want to believe. That's significant growth there. Tip ranks has it less. And there's the growth line. We like that. Revenue. And here's the company and industry. I'm not seeing anything too difficult. This is a new company. And the past performance shouldn't be too good. Yeah, because it just became profitable. So you can't read anything to this. So we were trusting the future growth to the analysts. Tip ranks is saying that, hey, this is trading at almost $52. Going to go to 55 or 56. And right currently has a hold rating. It's got covered by 7 analysts. That's pretty many for a small. And the high is 68, but that's not reaching 168. The average is 55, which is about $5 difference from what it's trading at the moment. About $5 difference. And the low is 50. The low is 50. The low is 50. That's going to be important. Low is 50. And it's going to outperform. That's great. At number 8, hedge fund activity increase. We like to see that. Nothing to report on insider activity. Fundamentals look good. Well, it's trading below a 200 moving average because of that hit after earnings. Next earning date is November 10th. We've got plenty of time. The industry they're in is medical distribution. It wasn't profitable. Now it is. And those numbers are above the line. We like that. The job of a swing trader is primarily technical, but I believe it's important to look at fundamentals. That's why I looked at undervalued stocks in this current market condition where we're at the top of the market. There's some bubbles there, like the housing bubble, runaway inflation, possibly. We do have inflation, though. I wish went to the grocery store. But I do think medical is going to be strong in the next decade. And I do think this stock has been beaten down right at earnings. Anyway, I think I just got sidetracked. But the job of a swing trader is to catch these swings. And these are technical. You use some indicators to kind of catch those swings. And I use the MACD, as I said. Stochastic RSI, this is TradingView's free. And the RSI. And when that all happens, it predicts a down. And now we have the MACD way below the zero line. The stochastic RSI came around back here. And the RSI came around. It's flopping. There's not much movement. It looks like it's consolidating. But tip ranks has this to go to 55. And the low is 50. Right here. And Simply Wall Street has it up in here, some way up there in the stratosphere, up to the moon. 50% retracement puts it right about 55. That's where I think it's going to go in the next 2 months. That's my play. I wanted to get to there in the next 2 months, and I want to use options. Now, you could just buy this stock. $51 a share would be $5,000. You buy 100 shares, I think you're tying up all that much money. I don't want to tell you. And it's especially for a stock that I've never traded before. I use an options simulator to plan my trades out for tomorrow. And I'm going to be rushed. I need to know what I'm doing because I'm going to be driving in the morning, shopping with my wife. So I want to go long, and I'm going to use a credit spread, a bull put spread, and the opposite of that is a bear call spread. And I typed that in, chose that one from the many different combinations it has there. It's kind of neat. Not holding anything back. Well, chance of profit, but you can get that from your broker. I'm going out to December 17th, a little further than 2 months. It gives me plenty of time to hit. When I back tested my system, I used 8%. If you've seen that, I mentioned 8% in my back test. And that's my profit target. If it gets to the 8% profit, you're going to see a lot of that. And you can take profit anywhere along the lines here. And if it pegs and goes the other way, you can take your loss anywhere here. But remember, 50 is right here. That's where it says it's going to go. It's low, if you believe the analyst. 50. So that's where your loss is going to be, right there. Anyway, you buy sell a put and buy a put protection, and your margin that you require to do this trade is 250. Max loss is 133, and your net credit is 117, nearly a 1-for-1, but it's not quite. And I'm going to probably do 2 of these because I like the $500 thinking. You don't have to do one. And as long as the stock price stays above 51.31 till the end, you're going to win 117, or you can take early profits there in about a month. or two. You profit anywhere along. If it pegs, I usually take profit. If it pegs south, I usually take my loss, because I at least don't lose the whole amount, and the trade didn't work out the way I wanted it to work out. So what do you think of this trade? Is this enough money for you? 2 of these trades is $200 over two months. That's $100 a month. If you do about 20 of these a month, you're going to have $100 a day. And you can do up to 12 or 14 of them with a $5,000 account, because you're only using this much margin. With a $5,000 account, you have $5,000 margin. That's $10,000 to play with if you want. I don't play with the whole amount though, but you can trade the 20. When $10,000 divided by 500 is 20 trades. Well, I like this trade, and it'll let me in and do a little experiment on how this thing's working. I've never traded before, and we'll see how it works out. Above 51.31 for $117. 51.74 right there. Trades up like that, and if it stays above that till December, 117. But I don't plan on being in this trade more than a month. Now, I'm going to apologize and end this video. Swing trading captures these peaks and valleys, but it's boring, slow trading. This took almost a month. There's 22 trading days in a month. 2 months. 2 months for $100 a month. But if you did 20 of these, that's a good amount of money. And I don't have to be at this the whole time. I can kind of check this. Once you get the trade on, you could call it a set and forget, but I check them every day. And you don't have to put stop losses or even profit targets, because these are divine risk trades. Now, at some point in time when I see things are profiting, I'll put where I want to take profit at and put a sell order in. But as far as stop losses, I kind of look to see where I'm at, and then Wednesday or Thursday or Friday, take it off if it's too far. I don't have to be in a rush. I don't have to be in the screen all the time. I can go shopping with my wife once in a while and enjoy myself. And I can sleep at night. Swing trading, I love it. My trading's gotten better because I've started sharing my ideas, and peer review has helped it. It would help you if you got involved. And one of those ways of getting involved is subscribe and like this video. And go to my Discord chat. It's free. And get involved there. Now, it's not a great place to hang out yet, but it's growing. See you there. Happy trading. Catch you on the flip.